Companies invested more than $200 billion into U.S. EV manufacturing across the U.S. through 2024, mostly in Republican areas and much of it in the South. But now, it's all in jeopardy. Automakers are canceling factories, cutting production, laying off workers, and shifting back to gas. The federal government has rolled back EV funding and is planning to relax emission standards. Now, some say automakers stand to lose $100 billion or more on their investments in the U.S.
We've never seen anything like this in the auto industry before, ever.
A big reason, demand has not met expectations.
Whilst our sales were growing on EV in the first quarter and they were representing a significant amount, in the fourth quarter we saw more than 50% drop on EVs.
That caused financial pain for this investment. It's something that we have to live with now.
Some say this is a blip. EVs are inevitable.
The reality is that these vehicles are safer, are better for the environment, are faster. We could argue they're cooler.
CNBC went to 2 southern auto industry towns to see how EV fever affected local economies and what happens when enthusiasm cools. Nearly 1 in 5 vehicles exported from the U.S. is shipped from this port here in Charleston, South Carolina. The state has been the largest U.S. exporter of both cars and tires for a decade.
We're here at the Port of Charleston in South Carolina, and coming off this train right now are BMW SUVs from the company's plant in Spartanburg, just upstate. BMW's largest plant in the world.
Volvo and sister brand Polestar also have a presence in the state. So does tire maker Michelin.
When businesses flourish, our communities are uplifted. And a lot of people that live in the other surrounding areas have actually not only provided for their families, but have elevated their families to different heights.
For car companies, investing in the South is nothing new. Ford came to Kentucky in the 1950s. Foreign automakers followed. Low costs, tax breaks, and an able, mostly non-union workforce were lucrative incentives.
Where we historically think about automotive being more Detroit and Midwest centered, really the investments that have been made over the last couple of decades have been in the southern U.S.
We're not unionized. If you take the same factory and put it in Detroit, those salaries are going to be infinitely higher than they are here. And then obviously there are tax incentives and other incentives that have been made to allow people to be attracted here.
From Kentucky to Tennessee, much of the leadership is Republican. Nearly every state backed Donald Trump in 2024. And yet, companies have been directing almost 40% of EV-related U.S. investments to this region alone. Georgia led the nation by mid-2024. Its Republican governor, Brian Kemp, has said he wants to make the state the electric mobility capital of the country.
Trump is pretty far from a bunch of these investments, but when you look at mayors, state representatives, governors, local reps, they really like these investments because they benefit directly their people.
Rivian announced its $5 billion factory just outside Atlanta in 2021. It was the biggest economic development project in Georgia's history. Hyundai Motor Group has since beat it, investing $12.6 billion in the state, along with battery partners LG Energy and SK On.
In the Meta plant, we are hiring a total of 8,500 new employees. And then we have made an estimated calculation that we will create about 40,000 in the state. But recently, in addition to that, we have announced another $2.7 billion investment to move from 300 up to 500,000 capacity. And this is going to bring another 3,000 direct jobs to the plant.
The Korean automaker got an estimated $2.1 billion in state and local tax breaks and incentives. Jerry Roach, a longtime industry veteran, runs General Assembly at the Hyundai plant, where all of the parts of the vehicle come together.
Years ago, there wasn't a lot of excitement from people wanting to get into the auto industry. I see a difference and a change in the past 5 years or so, and this place is really a big part of that in this area.
EV-related investments were expected to create more than 230,000 manufacturing jobs nationwide, 77% of them in Republican districts. At a restaurant, a group of locals say the Hyundai factory and the economic growth of the area has been a mixed bag.
Yeah, I think that they're going to be shipped out to California, to New York. A lot of these places that do have the infrastructure in place already, But a place like Georgia, no.
A lot of people say, well, these things bring a lot of jobs and that kind of thing.
There's some jobs, yes, and that's a good thing, but then there's not as many as you think because they bring in outside personnel. But on the flip side of that, those personnel have to be supported also with local industry, and such as hotels and restaurants and that kind of, and housing and that kind of thing. So it's a mixed bag.
In a comment to CNBC, Hyundai said 74% of Metaplant employees are from the greater Savannah area and 89% from Georgia. Hyundai said Metaplant-built EVs are meant for sale nationwide, including in Georgia and the South. The region's EV share is about 1% lower than the national average. The blessings and challenges of economic development are both on the mind of Van Johnson, mayor of nearby Savannah. Housing, traffic, charging infrastructure, and yes, jobs.
Obviously, we're excited that Hyundai chose us. We're excited that they're here in our area. Certainly, they have worked very hard to make an impact in the social and educational lives of our residents. We've seen people coming here from all over the world, particularly from Korea, coming here as well. We're struggling to try to keep up.
The interesting thing about Georgia is that it's like a purple state. You have like Democrats, you got Republicans, and there's like a lot of, there's a lot of polarization on a lot of things. But, Kemp said he wanted to make Georgia the electric mobility capital of the country. I don't think
it would be in office a little longer to see that happen.
As Kemp's last term as governor nears its end, the broader EV landscape faces serious uncertainty.
At the peak EV hype, really about 2 years ago, the industry was looking to launch about 170 new EV models over the next 4 years. We're now down to far less than half of that over the next 4 years. And now what we're looking at is billions and billions and potentially hundreds of billions of dollars of write-downs globally over the coming years as these programs get canceled or pushed out, or their volumes are incredibly diminished.
One firm that felt the shift was Bosch, the world's largest auto supplier. It's a division of the German engineering and technology conglomerate. Its mobility business, which includes automotive, is about 60% of total sales.
I know you don't talk about customers in particular, but you supply
all of them.
The company wound down its diesel operations in Charleston, citing declining demand. When automakers pivoted hard toward EVs, suppliers like Bosch did too. A $250 million investment in Charleston included plans for an electric motors division. The plant also makes gas injectors and safety devices like electronic stability control.
So I'm here at Bosch in Charleston, and I'm standing in the part of the factory where they make their fuel injection systems. That's what I'm holding right here. They make these in different sizes. Bosch says that there actually is still a fair amount of innovation to be had on these systems.
So you had anticipation that e-motors were going to really grow as a business?
So from a projection and markets, absolutely. But the demand and the acceptance of the electrification was not widely accepted as originally planned.
EV sales have grown. They peaked at just under 12% of total new car sales at the end of the third quarter 2025. That was due in part to buyers rushing before the $7,500 federal tax credit expired September 30th. Still, it was never even close to many of the projections.
2 or 3 years ago, the projection for EV for 2030 was close to 50%. Then over the years, it dropped to 35, to 25, to 17. So now we're at 17% projection for 2030. Now, the investment was not made for 50% market, but it was not made also for 17%.
You're running into this brick wall of the demands not being there, and now we're dealing with the reality of it.
3 forces fueled this, Murphy says. First, Tesla, whose Model Y was as late as mid-2024 the best-selling vehicle in the world. Tesla, which had 46% of U.S. EV market share in 2025, showed through sales and share price performance that EVs could attract customers. Second, China's fast-growing auto industry, built around EVs, has become a global competitive threat. Lastly, regulators swung swiftly and decisively toward EVs in the wake of the Dieselgate scandal. Both the European Union and the United States set ambitious electrification targets.
Now what's happening is the realization that a lot of consumers really don't want EVs, and in reality are very happy with their ICE vehicles.
Consumer demand isn't the only driving force. Policy matters. When the $7,500 federal credit expired at the end of September, sales fell by half.
Some people kind of just say like the government shouldn't really interfere. Just kind
I
of
think the government should interfere a
You
little.
do think so?
I do, yes.
Okay, okay. Why do you think that?
I think, well, the government's interfered with like the auto industry many times. I just think it kind of helps boost that economy and helps boost like the market for it.
I don't think you need to provide those subsidies for electric cars.
So but yours sounds like you're saying like the product actually, sooner or later, is going to be able to speak for itself. You know,
That's my feeling. Having owned one for a few years, I just think the utility of it is so high, it's just a matter of time before the demand goes up.
Whatever one thinks of subsidies, the policy swings have been jarring to the industry. Hyundai had sped up the construction of the Meta plant so that its cars would be eligible for the credit that Congress later took away. Biden-era rules required that an EV be assembled in the U.S. to qualify for it.
We were the number 2 sellers of EVs in the country after Tesla as a group. And then obviously the removal of IRA had an impact in the industry, which we could clearly see in the fourth quarter.
Hyundai's EV sales were growing in the first quarter of 2025. By the fourth, they dropped 50%.
We took action to try to offset that with sales of plug-in hybrids mainly, but it was not enough.
By some metrics, these are good times for Hyundai Motor Group. Its shares hit all-time highs in January 2026 after the company unveiled plans to invest in robotics and AI at CES. The Hyundai, Kia, and Genesis brands all saw record U.S. sales in 2025. Kia crossed 800,000 units for the first time. Luxury maker Genesis crossed 80,000, and Hyundai had its 5th year of record retail sales and 3rd year of record overall ones. But those records were largely powered by hybrids. This is not what the Meta plant was originally built for. 2 of Hyundai's company slogans are Korean phrases that mean hurry, hurry, and plan ahead. Preparation mixed with an ability to change at the last minute are both key strategies.
And I think that this has been one of the characteristics of our company that allows us to navigate a little bit better than others, right? So that's the recipe of success.
A lot of these things were kind of Biden era, plans, and now a lot of that stuff has kind of been at risk, and so you have this company that's, invested a lot of money in this state.
They've married us.
Right.
And then after you married us, you kind of changed the terms of the marriage. And the reality is for us here, particularly in local government, we don't have the luxury to be partisan. We've made a commitment to Hyundai, made a long-term commitment to South Korea, and we want to honor that here in Georgia.
Our enemy is unpredictability. When you're talking about investment, from the minute you make a decision to the minute you apply it, you're talking at minimum 2 or 3 years. And then you have to use it for some years to make it a beneficial financial equation. So we're not just looking at the 5 years, you're looking at the 5 years plus the usage time.
It's not lost on ordinary consumers or voters either.
If we're going to make large investments in, say, EVs or manufacturing vehicles, and we need to work across the aisle in order to make sure that continues past one presidency, because otherwise it doesn't make sense, I think, to flip-flop back and forth.
You have Democratic senators, you have a Republican governor.
We're blue with red tendencies and we're red with blue tendencies. So
some of the people that I talk to in the auto industry say EVs have become politicized.
Absolutely. Well, we know that electric vehicles bring value in terms of our climate, in terms of creating more economic ways for people to move about, and it should not be politicized.
I don't have the time nor the desire to sit back and get personal with whatever party you're on. If I need to be able to get food here to put in the food bank for the resource center, I'm making whatever call I have to.
With demand falling short of expectations, these car makers and their suppliers now face the question, what do you do with billions of dollars of factory investment that may not pay off? John Murphy says there is a good chance that up to about $100 billion will have to be written down, meaning all these assets these companies have purchased or built, factories, equipment, all of it, stand to lose about $100 billion of value.
Because it has to be, because the products either are not going to launch or their volumes are going to be a mere fraction or percentages of what people were expecting.
Globally, there are likely billions more.
This is going to go down in history as one of the biggest mistakes on capital allocation that's ever been made, potentially in any industry.
In December 2025, Ford said it will repurpose its newly built EV plant in Tennessee for an all-new gas truck, even changing the name of the factory. It also said it would take a $19.5 billion pre-tax charge, spreading out the cost through 2027.
The EV market shrank to about 5% of the US market, but more importantly, we think it was the right time to listen to the customers. We evaluated the market and we made the call.
General Motors said it's taking a more than $7 billion charge on its EV pullback. International automakers are suffering much the same fallout. Everywhere, companies are recording changes and losses on their investments. Globally, Volvo also said in July 2025 it would take a more than $1 billion charge, citing a number of factors, such as tariffs, launch delays, and changing conditions across several markets, especially Europe and the US. The company said its Ridgeville-built flagship full-size EV, the EX90, took longer and cost more to develop than expected and won't be as profitable as hoped.
We were expecting a little bit more of sales. So yes, we have also recognized $1 billion more or less in impairment because of the volumes of this car.
There is a real significant burden these management teams have right now of justifying the investment they've made, pivoting as best they can to make it productive, not just for the shareholders, but for the constituents, being the state and local governments, as well as the labor.
GM, which has the second highest EV market share in the US, has had rounds of layoffs at multiple facilities. Ford and Korean battery maker SK On said in December they plan to dissolve their EV battery joint venture, a key pillar of Ford's US EV strategy. The company's laid off all 1,600 workers at their Kentucky battery plants. Ford said it planned to manufacture energy storage batteries at that factory and gas-burning trucks at the electric plant in Tennessee. SK will own the battery plant attached to the newly renamed Tennessee truck plant.
You're seeing some companies like Ford and GM taking big charges and writing down some of their EV investments and things like that. Are you concerned that you're going to have to face any similar kinds of charges or write-down?
So honestly speaking, I don't think so. One of our strengths as a company is the flexibility. You go to a typical of our competitors' plants, you will see 1, 2, 3 products maybe being produced. We produce up to 10 in the Meta plant. And in, for example, the most modern plant that we are about to start in Korea, Ulsan, is going to be 12. So the more flexibility you have, the less issues you have with changes in the environment, right? So I think, knock on wood, I don't think we're going to see this type of write-offs that we've seen with other competitors.
Hyundai initially estimated its plant was going to create about 8,500 jobs on site by 2031 and another 6,900 jobs at suppliers. So far, it has hired about 1,440 people at the site, not including those who work on site for affiliated companies. In addition to meeting its current hiring outlook, the company actually plans to hire more people. At least in the US, automakers are doubling down on cars that have gas tanks, internal combustion vehicles, hybrids, plug-ins, or extended-range EVs equipped with fuel-burning generators. EV sales did set a record in Q3 2025 at about 10.3% of all new car sales. But the hybrid share of sales is slightly larger, and it grew more year over year than EVs did.
Now we're going to build up Bronco and our whole lineup of hybrids. You know, last month our sales were about flat. Our hybrid sales were up 20%.
Ford has not abandoned plans for an electric midsize truck, and it does expect its EV division, dubbed Model E, to be profitable by 2029. Toyota, which has taken a lot of criticism for long favoring hybrids over full EVs, has started production at a new $13.9 billion battery plant in North Carolina. The Japanese automaker confirmed plans to invest up to $10 billion more than previously expected over the next 5 years in the US. Here in Ridgeville, South Carolina, Volvo is adding a hybrid XC60 alongside the all-electric Polestar 3 and the Volvo EX90. There is also a large plug-in hybrid SUV slated for production in Charleston by 2030.
We are adopting fast. We are changing fast. our portfolio to be what the consumer needs in US.
That's Hyundai's plan too. It added another $2.7 billion to Meta plant in 2025 and highlighted its intention to build hybrids, not part of the initial design. It's aiming for a mix of 10 hybrid and EV models. The company is also planning e-revs, basically an EV with a generator that charges the battery for additional range. Yeah, 10 models you're expecting to make out of Meta plant. Mix of hybrid and EVs, as you say, 500,000 expected unit production by 2030. Can you give me a sense of what the mix is like between hybrid and EV there, like what the proportion of each one will be?
In reality, nobody knows. I'm going to tell you the truth. Nobody knows. But that's why for us, the key is flexibility, right? So if you ask me when we started this project, it was going to be 100% EV. Then we launched the idea of producing hybrids, and we thought, okay, we're gonna get to a maximum of maybe 30%. If you ask me today, I think today the mix that I see is gonna be more along the lines of 70% plus for hybrids, and then the rest is gonna be electric.
You don't see a lot of hard conveyors in this plant. When I reprogram an AGV to go to a different station, or I reprogram an AGV to take the vehicle to a different area of the plant, very flexible and easy to change very quickly.
In Charleston, Bosch was able to move almost everyone from the EV Motors division to other departments.
We have a great training center here that everybody goes through, and we're able to upskill the workforce to work in multiple areas.
Going from e-mobility right over to the fuel injectors was a fairly simple change. Of course, the thing that we make is different, and the people are different, but thankfully, through the training that we have, the standards that we have, we're able to do this pretty easily.
This is the advantage that we have here in Charleston, is because ICE business is still strong, and the hybrid business, you still need ICE for the hybrid, and that now kind of balanced the equation a bit. But it did cause pain. There was financial pain because the equipment is not fully utilized, and structurally. So we build a structure and we build a manufacturing line to meet those projections, and there is of course consequence for that.
I hear this concept of stranded capital.
Yes.
This is an idea, this is something that people talk about.
And that's exactly it. I mean, just those two words put together exactly gives you that meaning. It's stranded. You're stranded with this equipment not producing as money as it should be producing to make up for this depreciation.
For now, Bosch is pursuing a strategy it calls multi-lane, preparing for up to 6 different powertrains: internal combustion, hybrids, plug-ins, full EVs, extended range EVs, and hydrogen. 4 out of those 6 have engines, hence Bosch's bet on gas injection systems. But the potential downside for automakers, some say, is that this proliferation of powertrains makes it tougher to achieve economies of scale, that optimal state where a company spreads out its costs by making large quantities of the same kind of thing. For most of automotive history, all cars ran on fuel-burning engines. The money an automaker spent on engineering and product development was spread out over its entire volume. Now, there are several different powertrains side by side, and because there are more powertrains, each automaker is liable to sell fewer units of each, unless it goes all in on one or two.
If companies pivot too hard to a shorter term story about selling more efficient hybrid internal combustion engine vehicles, they risk being like irrelevance in a longer term, and they risk losing more and more market share, particularly outside the United States.
And we are still committed to deliver 2/3 of our global sales, meaning about 3.3 million car sales by 2030, fully electrified.
So what does Ford's write-down mean for investors?
Literally means nothing. It's a non-cash expense. They spent all this money to build this factory, and then this factory is not going to be used. They can try to sell it, etc. But in the end, investors will look past this because it's a one-time write-down. Nobody's going to say, oh man, they took a big write-down, so I'm going to change my view on Ford's outlook.
In spite of the challenge of balancing multiple powertrains, the internal combustion and hybrid businesses are profitable. These automakers have also come out of the 2008 financial crisis and the pandemic leaner and more careful not to overproduce. And they are lucky enough to be doing this when overall demand is quite high.
If you did not have this underlying strength of demand for ICE vehicles, you would have an extreme existential problem on your hands. It doesn't mean it's going to create tremendous value for shareholders, but it's going to mean we're not going to have the meltdowns that we saw during the great financial crisis in any of these companies.
For example, in December 2025, Ford raised its expected earnings guidance for the year to about $7 billion, despite the $12.5 billion it planned to pay out that year toward the total EV pullback charge. The real risk is figuring out what happens next.
EVs gain share again, and they're like, oh, I don't want to invest all this money again. Oh, Mr. Government, please help me, etc. Like you can't run these companies changing your strategy in terms of powertrain every 2 years.
It is critically important that these management teams understand that this is a gimme, a mulligan, a gift from God, however you want to say it, and that they take this cash and they put it on their balance sheet and they prepare for the future.
Pure EV makers, such as Tesla, Rivian, and Lucid, have nothing to pivot to. Some are still bullish on demand.
The overall EV market is taking a dip, but for instance, in October, our delivery numbers went up.
I think this is the best vehicle we've developed to date. We're incredibly bullish on this and excited for it. It's of course it's cheaper, but it doesn't mean it's not an aspirational product, something that you're really going to enjoy and love to be in.
Rivian's sales jumped 14% in November 2025, the second month after the credit ended, and they were up more than 7% over November 2024. But still, its fourth quarter and full year totals were down compared with the previous year. Rivian said those results were in line with expectations. Meanwhile, Tesla deliveries fell in 2025, including in the fourth quarter, and the company said it will cancel its two most premium models, the Model S and the Model X.
Tesla showed that the people will buy that car. So, and as these people pull away from EVs, that just creates a vacuum for someone to fill that vacuum. And Tesla self-inflicted pulling away from demand and things like that. So I feel like someone like Rivian is well positioned.
That overall EV sales dipped so far after the credit expired tells analysts like Shepard that a major barrier to adoption is price. All three of these makers either already have cheaper models or plans to introduce them within the next year or two, depending on the brand.
It's just a matter of time until these companies achieve scale. Neither Rivian nor Lucid are fully funded today. They'll have to raise additional capital. That is a risk, so to speak. But our views is that EVs are only going to continue to accelerate.
In addition, these pure-play companies are investing in autonomous driving features and robo-taxi services, which could not only entice car buyers, but open up new markets. In spite of the challenges EVs face, many forecasts still expect them to be about 20 to 25% of the US market by 2030.
I think it's important for us to separate what we're seeing now and some of the tumult we're seeing in the market. There is a steady progress towards electrification of EVs. The tech is better, that the costs are coming down pretty rapidly.
EV policies are not the only ones that have made the industry jump in recent months. Trade disputes, tariffs, and shifts in immigration policy and enforcement have all affected the entire industry. Meta Plant made headlines in September 2025 when several state and federal government agencies raided a plant Hyundai co-owned with LG Energy Solution, detaining 475 people, mostly South Korean nationals. The government alleged the workers were in the country illegally.
When the ICE raid occurred, it caught everyone by surprise. I think it was a big mud on our face. The South Koreans were quite upset about it, and understandably so. And I think we worked hard to be able to try to rebuild those relationships.
The activities that took place on this campus were in a battery plant that's about 1/8 of a mile within this campus from here. So we didn't miss one lick in this facility. With tariff barriers hitting all automakers, albeit to different degrees, all are looking to localize production as much as possible.
We are very confident about U.S. market.
Volvo sold almost 122,000 vehicles in the U.S. in 2025. It imported 95% of them. It plans to sell 200,000 vehicles in the country, and it wants about 50 to 60% of them to be made in Charleston.
We need to be solid based in Americas, and I think we have the right place, which is Charleston. Very easy to produce with the supplier chain that we have.
Hyundai Motor Group said it is planning to invest $26 billion in the U.S. over a 3-year period between its 3 brands.
We want to achieve an 80% localization in the country by 2030. And also new projects like robotics and then others. This is nothing to do with EV or ICE or hybrid. We are committed to this market.
But as automakers remain committed, locals have reservations.
It's a mixed bag with the warehousing has exploded, along with housing developments for people coming in to work in this area. Along with that comes technology and improvements and other detriments like disappearance of farmland, cattle, and the quaintness of it all.
Honest to God, I think I could go to bed at night and the next morning there'll be a house up in our neighborhood. It's just like that.